And aloha and welcome to this edition of Five Questions. It's a feature that appears on this radio station, KHVH Radio, on my program, the Rick Hamada program. Also on HawaiiReporter.com. You can also find us on KHVHradio.com. It's a delight to speak with CEO of the Truth in Accounting Institute. Sheila Weinberg joins us today. Aloha, Sheila.
Aloha. Thank you for inviting me to your show. We're talking from Chicago.
Oh, I was born in Chicago. Are you a Cubs?
Still a great city.
Absolutely. Are you a Cubs fan or a Sox fan?
Blackhawks.
Blackhawks, even better. Excellent. All righty, Sheila. First of all, let's start with question number one, and it's the obvious one. Can you tell us about the Institute and a little bit about yourself, please?
Well, the Institute for Truth in Accounting I started in 2002 to have, because I was concerned about governments honestly telling us the truth about their finances. I was finding that I started on the federal side because the federal they were running surpluses, but they were going into debt at the same time, and I thought that was unusual and found out that that wasn't true. And then I looked at states and found that they were balancing their budgets, but they were also going into debt at the same time. And so I investigated that and found that to also not be true. So I felt compelled to let citizens know about these issues.
Best place to find you is online. May we have the address, please?
Sure. It's truthinaccounting.org, and that's truth and then accounting.org.
Question number two, of course, is one of the compelling reasons why we're having a chat, and that is a recent report that was involved Hawaii. And it was we were described in your report, Sheila, as a quote-unquote sinkhole. I've had a chance to read through some of the report, but could you explain to us how, first of all, you came to that conclusion, and what does it mean?
Well, what we did is we calculated the true financial condition of every single state. We took, for example, Hawaii's audited financial report, and we went ahead and looked at that, and then also looked at all their actuarial reports for their pension and retiree health care benefits, and found those liabilities, and we added what the state was liabilities the state was reporting plus what we consider off-balance sheet liabilities. And we found, let's double check this, we found $11 billion of off-balance sheet liabilities that the state wasn't reporting on their financial statements. And from that, we derived that each taxpayer's share of the financial burden that the past and legislators and governors have passed on to future taxpayers is $11.5 billion, which works out to be $25,000 per taxpayer, and that works out to be, I think you're the third worst state in the union, unfortunately.
It is unfortunate. What's interesting, though, Sheila, is that this is serving as a confirmation of what many of us have perceived to be and believed to be at the root issue of some of our problems. So, first of all, I want to thank you for issuing this report. The other part that we appreciate is that the Institute is a nonpartisan entity. There is no quote-unquote political skin in the game, so to speak.
No, a lot of times people ask me, well, what are the solutions? And, I'm like, we're just here to have the governments be transparent and to provide the citizens the financial information that they need to be knowledgeable participants. I think it's Thomas Jefferson once said that a formed electorate is the basis of a sound democracy, and we're finding that the citizens are obviously misinformed, so it's impossible for them to be knowledgeable participant in their democracy.
Absolutely. I've had a chance to talk with our state budget and finance director, Calbert Young, and he's actually had some commentary on the report that you issued, and it was gratifying to hear the state acknowledge the information that was provided. So that would lead me to question number three. When you talk about state accounting practices, not just Hawaii, how viable and how believable are those practices?
The states do their budgets on, in essence, we call it political math. Some people call it cash basis, or checkbook accounting. So they only look at, here's the checks that came in, we wrote, and here's the deposits that came in, and so they ignore any costs that relate. As long as they don't have to write the check, they just ignore those costs. This cash basis accounting is so unreliable that the IRS does not allow a corporation that makes more than $5 million of revenue to do their books that way, but the states do their budgets that way, and it's unreliable, non-transparent way to do your books.
As a follow-up to that statement, though, Sheila, in question number 3, and that is, we hear about balanced budgets all the time. Here in Hawaii, there's a constitutional mandate, of course, that we do have a balanced budget. But really, what is a balanced budget, and what's the truth behind balanced budgets?
Well, a simple way to explain it is, to ask, I know you're doing some questions, but to ask you some questions of, would you consider your budget balanced if you had to borrow to pay your bills?
Mm-hmm. Good point.
And most people say no. Would you consider your budget balanced if you were using your credit card to pay your bill and that balance kept on going up? And people say no. And then if you had employees working around your house and you said, hey, you know what, I really can't pay you this month, I'm going to pay you, next year because I don't have the money, you would consider your budget not being balanced. But that's how the states are doing their accounting.
Right.
They go ahead. The biggest thing is they go ahead and the employees, as part of their compensation, earn pension and retiree health care benefits. And those are current compensation costs. But again, because they don't write the check, they do not include them in the current balanced budget requirements, so therefore they can just push and push and push those off into the future. And taxpayers in 30, 40 years are going to be paying taxes that will go to these benefits, and these taxpayers will receive no benefit from those taxes. And that is just counterintuitive to those, counterintuitive to the reason you have balanced budget requirements.
I would imagine that in your findings with our state at such a large number of $11.5 billion that are off the books, so to speak, that speaks to our pension plan and also our mandated state health care for government employees, our EUTF. Sounds like that's a substantial number and probably will continue to grow, for that matter.
Oh, definitely, because they just continually not fund it.
Right.
The largest number that you have is retiree health care benefits. Yes, retiree health care benefits. Can we do questions 4 and 5?
Actually, we have the last question, and we're already. If I kind of miscounted there, I was getting caught up in the great info. Let's go right to the last one. Very top issue, Sheila, facing the nation today through the eyes of the Institute.
I think the very top issue is just, governmental accounting in general, and having the governments tell us the truth about their finances. Without the truth, there's no way we can get out of this mess. If we don't know how far the hole is and how fast we're digging it, then there's no way we're going to be able to get out of it.
Understand. May we have your website address one more time, please?
It's truthinaccounting.org. That's truthinaccounting.org.
Sheila Weinberg, the CEO. Sheila, thanks for the time today. We appreciate it greatly.
Thank you.
Thank you. Bye now.